Hello and welcome in this fine afternoon, at least in Europe. Today I'm going to continue my previous thread once again and explore some opportunities in commodity markets. And if in last video I explored in detail gold market, now we would see second key commodity market, and that is oil. Now it will be in similar fashion as with previous video, where I will be exploring larger trends first and then go to some narrower time frames and see whether there's something for average traders as well. With that said, let's go and start right away. Now, setups are identical. I use same candlestick chart and only one moving average, just to illustrate the point whether there are or not trends. We are not going to do any real-time profits or something like that, just evaluate how markets move through periods of time. And with that also said, let's start finally and look at some trends. Now, fortunately, TradingView allows us to explore markets since mid-80s, and we will start with just that, where we would see that oil started at around $30 in late 85 and then fell to around $12, so pretty significant drop. That was at the time when dollar became very strong. I remember I read about those markets in the mid 80s, but this is not that lesson. And then this might look small, but you have to skew that into proportion, because there are historical movements which distorts this chart, and those moves look smaller than that they in reality are, because here you can see the oil price moved from $11 to $21. That's twice. It increases twice and then fell 50%, so these are pretty decent trends. This is like the same proportion if something would rise from $100 to $200, but only because the absolute numbers are smaller, it looks smaller on the chart, but it doesn't mean there are not trends. There are trends, and there are plenty of them. As we see, the oil moved continuously in that range, and then when this was in the Gulf War, prices spiked from $16 to $40 and then reverted back again. This was Gulf War I, when Iraq invaded Kuwait and United States went to help it. And after that, oil prices moved pretty steadily in range between $12 and $20, as they did in the 80s. And they were not the best market, but for retail traders that was enough to make to those small time trends, because their volatility was low and you could risk rather large positions with those trends. And it continued to do that up until late 90s, when it reached its bottom at around $11, and then slowly but steadily started to climb. So first move was from $11 in early 99 till $36 at late 2000, then it reverted back again to $20 and climbed steadily to 74 in 2006. Then there was downtrend at early 2007 and right up until $147, which was the peak in summer of 2008. Then the recession across both sides of Atlantic Ocean already started, and oil prices reacted to a low of early $30, and then quantitative easing started and commodities fell to $110 and then fluctuated between that range of 77 to 113 right up until mid 2014. Now, I covered this in the short videos, but now I'm doing this in the much greater depth, so you could analyze that more thoroughly. So this is one of the greatest bear markets in oil, and plenty of traders made huge money out of that. I actually also traded these markets. I remember them very well, when oil steadily fell from $107 to late 20s, and then also reverted again up until around October 2018, and then slowly it fell out of the range and fell to the bottom at $9 in the height of COVID. But this was anomaly. I don't think there were many traders who actually were able to capitalize on that, because there were distortions in futures markets, and that spike when actually oil was for a brief time negative, was due to the, as I said, there was indifferences in future contracts and you couldn't actually make money on that. So this is more for show than to actual profit. But nevertheless, oil reverted from that bottom and went steadily to $129 when war in Ukraine started, and that was like, of course, after week after 24th February. And then oil stabilized, then people understood that we wouldn't be running out of oil just because Russia would be sanctioned, and we climbed steadily downwards. So these are long-term trends. As you see, as it was in gold, oil produced historically pretty good moves, and there is very good opportunity, no probability, that oil will do a similar pattern in the next years and decades. So this is the market that each trader should follow. And then we will see a couple of years daily charts for more realistic trading environment, and let's check out those long-term moves which are analyzed in weekly charts. Let's start with something relatively recent. Let's say 2014 bear market would be nice. As you see, in realistic scenario there was trend from $100 to $41 just by using moving average as an indicator. So here again we are break even because there are a couple of small profits and break even trends and small losses which cancel each other out. And then there was small bull market in for about a year from September 17 till October 18. Then there was small bear market again, bit narrower markets within the range of 65 to 50 without any large profits. But yes, COVID gave good money making opportunities for trend traders. And then all that instability, the aftermath after COVID-19 and economic recovery and crisis in Ukraine with war that followed after, gave two good trends for long-term traders. And let's see in the next month if the downtrends will be profitable as well, because I don't know, I wouldn't bother to forecast whether oil from here will sit at the range, spike or crash. I don't care. I'll just trend the market. I will just use the market trends into my advantage, and that's it. So this was daily chart. Let's look at hourly chart and see for short-term traders in last couple of years, how did that perform. I will adjust the chart so it's a bit easier to navigate, because as I'm telling you, charts lie because they are skewed in one way or another, and you have to take to aware that not all that you see within your eye is actually reliable. That's deficiency in our perception, but we cannot avoid it. Okay, not to waste your time, I will continue my thread and show last couple of years, and I will cover the same topics I covered in my short videos, but now there will be more depth and more analysis. So my 2019, one small trend, couple of break-even trends, there we are doing nothing for this time period, but hoping that we are break-even. Then there are a couple of small profitable trades, and then if you traded in 4-hour chart, then this would be spectacular trends. One trend here and second trend here. Like, if you use risk management correctly, I would say you could easily double your capital in this trend without risking too much. Your capital will go double. Yes, here's like minus $39, but that's not real. You wouldn't be able to capitalize on that. You simply would. I would say probably somewhere here that your trades would be closed, but that's also a pretty goddamn good deal when you could capitalize $40 from oil trade, Doesn't matter how large your account size is, but if you even risk 1% of your equity, this is double your capital if you pyramid and use risk management correctly. What's more surprising, the next trade you could trade, I think that the next trade would be a winner as well. So 1, 2, 3 winners in a row, because this would increase your capital about 10-20%. This could double your capital, and this could easily make 30 or 20 to 40% of your equity. So your initial equity will be like 3 times larger out of those 3 trades. Because what would you do when you make money here? You could increase your capital, thus your absolute risk per trade is larger because your capital is larger. Here your capital is nearly doubled, hence your risk is doubled in absolute terms, but in proportion to capital it's the same, say 1% of that, it will be 1% or 0.5%, but if your money is twice as large, your absolute risk and returns will be twice as large. And here also you will magnify your capital. So this is where the trading actually shines. This is the way you could increase your capital and your bet size to different league simply by following trends. Yes, and there are other smaller trends which eventually evened out in choppier markets, but still you could endure for like 3 months, but this is nothing, compared to these huge moves. Couple of losses in a row, that's part of the game. And then oil also from late 2020 till spring of 2001 continued uptrend. So this is also a very nice market. And then choppy markets continued, but this is not that bad. You have like 5 to 6 losses in a row, 1, 2, 3, 4, 5, 6, 7, 8, like maybe 9 losses in a row. Then those couple of break-even trends, and then you still made profit on these moves. All of these moves yield you some profit. And then at the late 2021, market started to trend again. Actually, no, not only trend upwards, but also downwards, as you see here. So as you see here, from September to November, one uptrend. Here is small downtrend, but not great. And then when the war started, yes, oil spiked from 74 to around $100. I don't know what's the best place for you to close the trade, but that's here. Of course, you wouldn't be able to take all this move, because that's how trend following unfortunately works. You cannot take all the moves all the time, you just balance out the probabilities. So this was a good move, and yes, due to the huge instability of the Russian sanctions and global disruption of commodity flows, oil was extremely choppy, so you wouldn't make much money here, that is like, these are pretty bad markets for traders. But yes, you had some spectacular moves at the time of COVID and aftermath of COVID, and here in late 2021, early 2022, and this balanced it out by big choppier markets. But there's nothing much to do, you hopefully made only some small losses, and you made far more money here than you're losing here. That's principle of trading. And then markets kind of evened out and gave you 1 and 2 downtrends here. So this is a realistic trading environment. Couple of nice trends, as you see. Nice trends here, nice trends here, nice trends here, 3, 4, 5 trends, and then there are very choppy markets. That's realistic strategy, not when people are saying that they will give you 99% confidence in the fact that all of your trades will be winners or similar nonsense. No, realistically, this is how trading looks like, and it's how market looks and how you capitalize on that. And I will continue this trade by exploring some of more interesting commodities, not more interesting, but important and interesting commodities as well. So stay tuned, because there are plenty of markets, plenty of trends, and plenty of opportunities. And cautious trader and trader who is alert and knows how to exploit his opportunities will always make money, because world always gives you opportunities despite what others say. And with that said, let's meet at my next video, and make sure that you are subscribing to my channels. Bye.